So in this video, I'm gonna do a deeper dive answer on a question that I got last night on one of our lives. And the question is, do you have to include your property taxes and homeowners insurance in your monthly payment? The simple and quick answer for those of you that don't have a long attention span, the answer is no, you don't have to. Now, for all you folks that are looking for more answers and the kind of the why behind all of this stuff, let me give you a little bit more explanation here. So, depending on what kind of loan you are doing. So there's conventional loans, there are FHA loans, VA loans, jumbo, there's different kinds of loans. Depending on the type of loan that you are doing will dictate whether or not you are allowed to waive those impounds. And the impounds, that by the way, it doesn't mean they're like taking your car and impounding it. An impound is basically a term used for your monthly, it's also called escrows. I know we're very confusing in the mortgage business, but what it means is that on a monthly basis, the lender would be collecting from you to pay on your behalf 1/12 of your property tax bill, 1/12 of your homeowner's insurance bill. So depending on the type of loan that you're doing, you have the option to waive impounds. So on the most common types of loans, which is your conventional, your conforming, Fannie, Freddie, tomato, that's all the same thing. On those types of loans, you can actually waive your impounds for loan to values up to 97%, meaning if you only put 3% down, you can waive your impounds. If you're doing an FHA loan or a USDA loan, you don't have the option. Those government loans require impounds. Now, if you're a veteran, thanks for your service. If you're doing a VA loan, you can waive your impounds with 0 down. So 100% financing, no impounds. So depending on the loan type, it'll dictate whether or not you have to have impounds as part of your loan. So let's talk about the pros and cons of having impounds, because it's not necessarily a great decision to waive your impounds. If you waive your impounds, that means that you're on the hook for remembering to not only save for your property tax installments and your annual homeowner's insurance renewal, but also pay those bills instead of just having the lender take care of it on your behalf. I will tell you that most people, probably 9 out of 10, do elect to have impounds. Now, the downside of having impounds is really just it's more expensive up front, because when you get your initial loan, the lender is going to have to collect a few months of property taxes and homeowners insurance in order to ensure that the account, that the impound account or escrow account has enough money in it so that when your property tax installments become due or your insurance renewal becomes due, there's enough money in the account to cover it. Because if they don't collect some money up front, they won't have enough money. It'll be insufficient. Here's an example. If you were closing, today's the last day of February, if we funded your loan today, you won't have a mortgage payment for the month of March, which means that your first payment would be due in April. Well, a lot of states, including California, that's when a property tax installment's due. If you had impounds and the lender did not collect 6, 7, 8 months of property taxes, they wouldn't be able to cover that and make sure that you have a sufficient balance going forward. Same is applicable for your homeowner's insurance. So the con is basically that you got to come up with more money up front and you're on the hook for that additional amount every month. The pros are that you don't have to worry about paying it on your own or saving for it on your own. The lender just basically is going to do it for you. You got to pay it one way or the other. So it's not like an option of like, I'm going to just check the box and not pay property taxes. We all wish it worked that way, but it doesn't. So it just more comes down to what makes more financial sense for you. So who does it make sense for to waive impounds? To be honest, what I see as a mortgage professional is that typically the people that elect to waive impounds are either people that are self-employed that have varying amounts of income throughout the year. Maybe they get giant lump sums of income, and then there's periodic drought periods where they don't have money coming in. So it's easier for them to just make big payments a couple times a year versus having to budget out and spread it out over the course of time. I see that for high income earners. And then let me be Captain Obvious real quick here. If you're paying cash, there's no mortgage, so the lender's not going to impound. So obviously, if you're in the position to pay cash, you're also going to have to be responsible for your taxes and insurance. So I hope that answered your question. If you like this video, do me a favor, hit that like button. If you want to see more stuff like this, make sure to subscribe. If you got other questions that you want answered, put them in the comments below, and I'll see you on the next one.